Like a Lifestyle here. Time for the weekly recap. Turn it up a little bit, if you can hear that. I was supposed to do this. I was supposed to do this on Saturday, but I took a family trip on Friday, and I was tired as hell on Saturday, so I didn't get a chance to log everything and catch everything up for you guys, so you guys, could do some of your own research. The 2 or 3 of you guys that are watching this at the moment. But one day there'll be 2 or 3 million people watching this, so start somewhere. So I'm going to recap the week. These are every trade from round 6, 7, 8, 9, and 10. Round 10 was Friday. I wasn't here for Friday, so that one wasn't 100% trackable. But for the other ones, it was. So let's kick it off with this. Stock market playlist. You guys already know what it is. 30 resources, $30. If you would like to learn instead of spending a year trying to figure it out on your own, purchase this. Follow me on Instagram at Like and Lifestyle for all your fitness and finance posts. Follow me on Twitter. I just posted my recap for the day up here, so you can watch these videos if you would like. Hey, I'm already getting views. That'd be damn. So yeah. Play a little Japanese lo-fi copyright-free music. And of course, the motivational whip. Koenigsegg 1-to-1. This car is $7 million. And I will own one day. Or at least be able to afford it. So, this one won't be as long as the last one probably, because I kind of got the hang of it now. I'm filming on my GoPro because my phone takes for fucking ever to upload a video. So at least with this, we get everything situated faster. So, as you can see over here, I'll make sure this is showing. As you can see over here, I'll get right up on this thing. These are all the companies I was watching for the week. These in yellow never activated officially. Most of these are from Friday, so I'm just not going to count them all together because I wasn't watching them when they happened. And these at the bottom, these are swings. These are all swing trades down here. So yeah, this might be a little skewed. Maybe it's closer to, is that 20, 27, maybe 29, 30, 27. Maybe it's closer to 32 actually. Instead of the whole amount. So right here it says 50. I was watching 50 stocks all together. As you can see right there, 50. Of the 50, even though a whole chunk of them didn't count, but whatever. Of the 50 I was watching, 33 were triggered. That's a 66% trigger rate. Of the 33 that were triggered, 28 hit, which is an 85% win rate of the 66% trigger rate. And only 5 missed. When I say missed, that means it never hit the call. It never hit any target on the call or the put side. And an official death at the moment is when the call doesn't hit the first price target and then the put is activated. Such as with LUMN. Right here. This is the call side. And then eventually the put side is activated down here. And when that happens, the call side is now dead. Had you taken every single trade, including the swings, well, I didn't do that yet, my bad. Had you taken every single trade of these 45, 50 tickers, right? It would cost you just shy of $7,000, right? Had you only sold at your first price target, which is all these, you would have got a total of 12% return, and you would have ended up with about $7,900. So $7,000 to $7,900 I mean, that's a decent week. That's like $100 a day, but it's not the best week. Last week was 25% on the first round, and I think 64% on the second round. But this week was 12% on the first round. So, hey, they can't all be 100% weeks, but it's all about consistency, consistently hitting the numbers and taking it that way. Had you only sold at the top, so if you only caught the best percentages, 183% here, 130% there, 100% here, 100% here, then you would have returned 26% for a total of $8,800. So from $7,000 to 88 grand. I mean, your $7,000 from 8,800. That is a lot better return. That's a very good 26%, and that is more along the lines of what you should be shooting for overall. Now it could all be different. Let's say you took the whole $7,000 and put it on LUMN right here, and got that 183%, and then just didn't take nothing else. This will be completely different. But you never know what's going to be what. So this is only if you took one for each one. You only took one trade here and there. That's what it will be. The majority of the money spent here was on the Adobe call. That was $1,200. And the Labu 917 call was $800. And then the WLTW 917 call was $540. So those three calls there was, what's that, 12 to 25. That's, that's like a third of your entry prices in those three trades. So if you take those three trades out, which weren't that profitable, 14%, 10%, and 5%, then this will be a lot higher. So keep that in mind as well. As you start using your hard-earned money, you probably won't be taking those $1,200 trades starting off. But for the sake of practicing the strat, I went that route. So in the swing trades down here, it was a total of 5 of them, longs and shorts, all over the place, as you can see. Had you taken all the swings, we had 100 shares a swing. That's a good starter position, is 100 shares. As your money gets longer, you can do 1,000, and as your money gets real long, you can do 10,000. Once you get up to 10,000 shares, now you win big talks. You in big money then. Cause 10,000 shares at a 10-cent swing, that's $1,000. So 10,000 shares at 39 cents, that's $3,900. That's a nice little chunk of change. That'd be $9,000 instead of $900 right here. So you took all the trades. The entry was $42.40 for 100 shares of each of these swings, and you would have got it at $43.30 for a 2% swing overall, which isn't that great when you think about it. It's only $90. But hey, the strat gives and the strat takes away, so this is what you're gonna have to deal with. So overall, altogether, you would have been in for, what's that, about $11,500. We'll say $11,250. We'll say $11,250, and you would have got out what's that, $12,12. It's not that much. It wouldn't have been that good for you. I mean, you would have been profitable. You would have made at least $1,000 on the week, which is still good. But in comparison to prior weeks, it's not the best. But from a numbers perspective, 85% win rate, 15% loss rate. That's what you need to focus on. You're winning more trades than you're losing by a long shot. And that is what builds up to massive account size. And now let's do, make sure it's still recording. And now let's do the trade of the week. Technically there were 3 trades of the week. One of them is a trade from this watch list, and the other 2, excuse me, and the other 2 are trades from the previous week list that kept going this week. So I guess they could be honorable mentions, but technically they are the trades of the week because they kept going. But LUMN, Lumen Technology, this is a very good dividend stock. Look them up. LUMN, PSEC, And hell, we'll say AT&T. Those are very good dividend paying stocks. They all pay over 7% dividend annually. In layman's terms, you put 100 grand in there, you get 7 grand back a year. It doesn't seem like a lot of money, but let's say you won the lottery, you got 10 mil, and then you put that whole 10 mil in AT&T, they'll pay you $700,000 a year for free, and you still got your 10 mil. So, you know, once the money's long enough, the returns and the amount of money you get from the returns is going to be compounded. But AT&T is only 7%. PSCC, Prospect Capital, is 13%. So then your million becomes $130,000 a year from a monthly pay rate. So they're paying you over $10,000 a month for your M that you just have sitting there. So you can stash your M and live off 100 grand a year for free forever. You know, dividends is definitely the way of the future. That's one of my end goals, is to build up $1 million portfolio on dividends, so that I ain't really got to worry about another bill in my life. So like I said, LUMN, this is actually on the put side. The 820 $12 put was triggered right here at 12.38, and then the 917 $12 put was triggered right here at 12.28. The 820 put was 30 cents. The 917 put was 50 cents. These are pretty close together. This could almost be considered a super put. They're precisely 10 cents apart, and that is the limit I give for super puts or super calls. They should be, if they're 10 cent, actually they should be less than 10 cent to be a super call or a super put. But 10 cent is the absolute maximum. So in that case, you can raise the 917 5 cents and lower the 820 5 cents. So your super put entry would have been 12.33. 12.33 is where you load the boat with puts, because it is a double trigger on the weekly and the daily for a drop. But the 917 and the 820, they both hit for 16% and then 30%. Right here kept on going down to 43% and 60%. Went a little bit further. This all happened in one day, as you can see, straight shot down. Boom. Third level, 117% and then 90%. Went a little bit further to a grand total of 183% and 130% on the monthly August and September. It went actually lower than that, but I didn't track that one. So we could say it might have been 200 and 150% at that very low, because that was another 14 cent drop. So that was a very good trade on LUMN for the official trade of the week. Unofficial trade of the week, Under Armour. Under Armour was a runner and a track star. Wow, this was so good it should have been an actual swing. This is where, if you have the conviction that you know what's happening, there's nothing wrong with taking a double entry, where you take the call right here, the $18 call for $17.81, and you add shares to it. So you could took 100 shares for $1,800, in addition to, let's say, 10 calls for $850. So you in for a total of $2,600. And then when it's all said and done, you out. Let's say you got out for $21.50. So you made about $400 on the long. You made $400 on the long, but then you made let me think, $1,700. So you would have made about $2,100 altogether if you took 10 options and 100 shares. If you took all options, you can only imagine. If you put the whole 1,800 on this, let me think. 1,800. You'd be up about 3-4 grand minimal. So Under Armour just had a wonderful week. I don't even know what the news was on this. I don't even check the news on these options yet, because I'm just looking at raw price action. So I don't care what the news is. What is the chart doing? Because we've all seen, like with Pinterest and Triple M, they can have wonderful news and the chart still shits the bed. So if that's the case, the news is not as big of a factor as we once thought it was. I mean, it's still good to know, and it gives you conviction to let you know your trade is going to work even better, or let you know that there's a few more price levels you can look to hit instead of taking your profits there. But from a raw strat perspective, just take it as it goes. I mean, it's like stair steppers. You could have loaded up again here, 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 and here. It just kept climbing on up. So the $18 call, which still has legs on it technically, so this could still do more tomorrow, but I've stopped watching it. But I do have one final alert right here, and it was 14 cents away from that alert today. So it might hit this today, and we'll see, you know, the final number it goes for. So the $85 call went from 85 cents to 110 cents. I mean, for $85 to $110 to 120, 130, 155. Don't know that number. 210, 245, 310, 340 for a total of 300%. Beautiful trade. MU was, I think, the trade of the week, or almost the trade of the week last week. But it kept going. It was not going down without a fight. Like I said before in another video, the Bronner formation right here becomes a support once it breaks it. It's a resistance on the way up. But once it broke it, now, as you can see, it's bouncing off of it. It's bouncing off of it. That's support. Now it broke under it again here. So we'll see if it stays under this tomorrow. I won't be watching it, but I'll check this at close. And if it doesn't break it, we can keep on going up. If it does, we coming on back down again. We can go all the way down to here, which is a $6 drop. It's totally probable it can do that. It might take it a week. It might take it a month. It might take it a year. But it could fall all the way back down to here, or hit new highs. Who knows? So the $77 call right here. The original August 6th expiration was $1.50. And then that one ran all the way up here to 306%. On the Friday of expiration, it hit 300% because there was so much volatility that it was just going crazy. The reload, the 8/13, 1 week out, $77 call was $170. That one hit a total of $615 for 262%. And that one still has this week to finish. The one last week, you had a sale last week, but this one this week is not done yet. So that was a beautiful trade, 306%, 262% on the Micron play. This is another way to let you know that you should add to your positions if it triggers the weekly, because this is a weekly trigger. So this was a chance for you to add a week out, but instead I did instead of doing a month out, I did a week out right down here, just because it was a reload, I believe. But you could have added a September, and it probably would have been up maybe at least 100% by here. So those were the trades of the week. And damn, this is a 20-minute video? I thought it was gonna be 15 minutes. Oh well. So yeah, that's all the trades of the week. Be on the lookout. I am currently working on a more hand-holded approach to the strategy I'm using. You can find the strategy in my stock market playlist. One of the sources in my stock market playlist has 6 or 7 webinars on the strategy I'm using. It is public knowledge what I'm doing. But if you don't know what I'm doing, I've already said it a few times, it's called a strat. But if you don't understand that, or you're being lazy, you don't want to learn it yourself, I will be releasing a strat playlist video program in the next few weeks. It'll be $15, and it'll basically be a hand-holded, step-by-step playlist to show you what are candlesticks, what's the strat, how do you use it. I'll give you all the webinars, I'll give you all the resources. I'll even give you some of my scanners that I made myself. I made these scanners myself, and they have been working very well for me so far. I'll give you those. I'll give you my my hourly chart setup, which is this. I'll give you access to this. Let's show you Under Armour. See how it looks. I'll give you access to this. I'll give you all of my scanners that I use, at least my main scanners that I use, because I have several levels of scanners. And in order to not overwhelm you, I'm going to just give you the ones I use the most, which is only 4 scanners, but I have about 10 that I can use. But I don't use the other 6 mostly because I get enough plays from the 4 that I have. So I will include that, as well as some other reading materials and stuff. Because the guy, the videos on the strat that are public knowledge have very low view count, which is sad. Which shows people don't, do the due diligence to find it themselves. So I'll definitely point you in the right direction for a nominal fee, 15 bucks. Don't shoot the messenger. If you wanted to find it, you would have found it already. I definitely didn't know about it till someone showed me, and I had to pay to find out. So why not keep the train rolling? So yeah, that was it for the weekly recap. We will see how next week goes. Thank you guys for watching. Have a good one.